One of the biggest mistakes crypto investors make, over and over again, is failing to take profits. Every bull market, portfolios explode in value. People feel like geniuses, and they dream of Bitcoin hitting $500,000 or their favorite altcoin doing another 10 times. But then, the market crashes. Suddenly, that life-changing portfolio is gone, and they're stuck holding bags through another brutal bear market. Taking profits is one of the hardest things to do in crypto. Buying is easy. Selling? That's the real challenge. It goes against human psychology, against our emotions. When prices are going up, people get greedy. They convince themselves that the market will keep rising forever. They see traders on social media showing off million-dollar gains, and they don't want to sell too early. Then, when the market crashes, they freeze. They wait for the bounce that never comes. They tell themselves they'll sell when it recovers, but before they know it, they're back in a bear market, watching all their gains disappear. The key to avoiding this? Sell into strength, not weakness. You don't want to be selling when everyone is panicking. You want to sell when everyone is euphoric. So how do you actually execute a smart exit plan? The first rule: never sell all at once. Instead, use a phased exit strategy. Here's how it works. Instead of trying to time the absolute top, which is nearly impossible, set multiple price targets in advance and sell a percentage of your holdings at each level. For example, sell 20% when Bitcoin is up 200% from your entry. Sell another 30% when it's up 400%. Sell another 30% when it's up 600%. Keep the remaining 20% as a long-term hold. This strategy removes emotion from the process. You're not panic selling in a crash. You're systematically locking in profits when the market is strong. A great way to automate this is by setting limit sell orders. Instead of watching the charts every day, set your targets and let them execute automatically. Now, how do you know when a bull market is peaking? One of the best tools for this is on-chain data. Here are 3 key indicators that historically signal a market top. 1. Bitcoin exchange inflow spiking. When long-term holders start moving Bitcoin to exchanges, it often means they're preparing to sell. You can track this using platforms like CryptoQuant or Glassnode. Second, MVRV ratio above 3.5. This metric compares Bitcoin's market value to its realized value. When it crosses 3.5, it historically signals a market top. Third, extreme greed on the Fear and Greed Index. When everyone is ultra bullish and the index hits 90 or higher, it's usually a sign that euphoria is peaking. Before selling, there's something important to consider: taxes. In most countries, selling crypto is a taxable event. This means you could owe capital gains tax on your profits, especially if you've held for less than a year. A smart way to minimize taxes is to sell in smaller chunks over time, instead of realizing all your gains in one taxable year. Another strategy: harvest in losses. If you have positions that are down, you can sell them at a loss to offset the taxes on your gains. To track your tax liabilities, use tools like Coinly or CoinTracker. These platforms automatically calculate your gains and estimate what you owe. Once you've taken profits, the next step is off-ramping your crypto safely. Moving large amounts of money from crypto to fiat should be done carefully. Here's how. 1. Convert some crypto into stable coins first. This removes price volatility while keeping you in the crypto ecosystem. 2. Move stablecoins to regulated exchanges like Coinbase or Kraken. 3. Withdraw in smaller amounts over time to avoid banking restrictions. 4. If possible, withdraw directly into a high-interest savings account or investment portfolio so your cash continues working for you. For added security, consider using crypto-friendly banks like BankProv or Revolut, which are more accommodating to large crypto transactions than traditional banks. Taking profits in crypto isn't just about making money, it's about keeping it. The best way to do this? Sell in phases, not all at once. Use on-chain data to identify market tops, minimize taxes through smart planning, withdraw funds safely and strategically. The worst thing you can do is hold blindly, hoping for higher prices forever. Markets move in cycles. Every bull run has an ending, and the investors who exit at the right time are the ones who dominate the next bear market. Now I want to hear from you. Do you already have an exit strategy, or are you still figuring it out? Let me know in the comments. If you want to learn how to build a profitable long-term crypto strategy, check out learningcrypto.com. It's where we teach real, practical investing without the hype. Thanks for watching, and I'll see you in the next video.